Hi everyone, my name is Prerik Sethi. I'm one of the co-founders of the India InsurTech Association and the founder of RIA Insurance. I'd like to welcome all of you here today. The India InsurTech Association is excited to partner with Life Insurance Council to organize this event today. First, let me spend a couple of minutes to introduce the India InsurTech Association to our participants here. The India InsurTech Association, or IIA, started as a conversation between Shwetank Verma, Subhajit Mandal, and me in August 2020. While InsurTech was a hot topic of conversation amongst the insurance ecosystem in India, we found that there was no formal body driving interactions between startups, insurance companies, reinsurance companies, and professionals within the space. And when we looked outside of India, we found that pretty much every other large geography or every other large region had an InsurTech association. So we co-founded IIA as a not-for-profit that brings together the entire InsurTech ecosystem of startups, insurers, reinsurers, service providers, technology companies, insurance professionals onto a single platform. As we started this organization, we also outlined a high-level mission and a set of objectives for ourselves. Some of these are, number one, facilitate partnerships between startups and the broader insurance industry, such as insurers, reinsurers, service providers, and investors. Number two, help Indian InsurTech companies to access global markets. Number three, connect InsurTech startups with insurance industry experts, not just within India, but also from outside of India. Number four, be the independent voice of the InsurTech ecosystem to engage with policymakers to foster forward-looking policies. Five, publish and promote thought leadership. And six, promote initiatives which use technology to increase the insurance penetration across different socioeconomic segments of India in a more equitable way. The growth for us has been great. In the last 2 years, we've now grown to over 165 plus members. Among some many different initiatives, here are a few that I wanted to actually outline for everyone here. One, we recently published our second annual report on India InsurTech landscape and trends with collaboration with BCG. This report, by the way, is available on our website. We also continue to work, by the way, on various thought leadership initiatives, which includes working groups on various topics related to the use of technology in insurance, a Deep Tech in Insurance series. We are helping to organize hackathons, and we're also working on the idea of an India InsurTech stack. We also, by the way, organized our first annual event in April 2022, which had over 230 participants from the InsurTech industry. We started planning a second annual event in April 2023, where we expect over 500 participants. Also, to help our startup members to grow globally, what we've done is we've done 10 plus tie-ups with similar global InsurTech associations, such as Italian InsurTech Association, InsurTech Australia, InsurTech London, InsurTech Israel, etc. In India, we've also had partnerships with Gift City, NIA, BIMTech, and the Institute of Actuaries of India. For all the participants here, if you are a member of IIA, we thank you. If you're not a member, please do join us. We also want to thank Mr. Bhattacharya and Mr. Iyer from the Life Insurance Council. We hope to organize a number of events and produce thought leadership on the use of technology and data in the Indian life insurance industry in collaboration in the future with the Life Insurance Council. Now to switch gears and talk about the topic for here today, embedded insurance, a new frontier for product innovation. I think embedded insurance has been one of the most talked about topics in InsurTech over the past 24 months. However, in India, a large part of this discussion around embedded insurance has historically been in the area of general insurance. So we want this to change. Our colleagues here today from Insurmore, Discovery, Aegon, and Star Union Daiichi, they are to talk about the potential of embedded insurance in the Indian life insurance industry. Embedded insurance can become a very interesting proposition, right? It can help Indian life insurers to come up with new insurance products, which I'm sure they're very excited about, bring down the coverages into smaller ticket sizes for the masses, and finally also open up a new set of distribution channels that have historically not been available. I'm definitely looking forward to the discussion today. With this, I'm going to introduce a moderator for the day. Our moderator is Anu Chaudhary Ghosh, who's an EXCO member of the India InsurTech Association. With a modest beginning at LIC of India in 1994, she's been a founding member of multiple life insurance companies and one of the few individuals who understands and has led underwriting, claims, customer service operations, as well as BD, bank assurance, employee benefits successfully. She was a deputy CEO at Edelweiss Tokyo before she transitioned to business development and sales. She's also consulted independently with several promising InsurTech companies. Currently, Anu serves at Star Union Daiichi as a head of the digital business head. Thanks. Over to you, Anu. Thank you, everyone, and welcome.
Thank you, Prerak, for the introduction. I'm thrilled to be moderating this session on embedded insurance, a new frontier for product innovation. Let me begin by welcoming everyone who made it possible for us to have the session today and made time to attend the session. By the end of today, I hope that each of us goes home a little richer in our knowledge about embedded insurance. So, to begin, let me talk about India's insurance market. It's valued at US $131 billion and is expected to reach US $222 billion by 2026. India's penetration of insurance was 4.2% in FY21, with life insurance penetration at 3.2%, which was 2.9% in 2019. So we are now closer to the global average of 3.3%. Traditionally, insurance is sold through agents, brokers, or bought directly from an insurer. But now there is a new way to buy insurance, where embedded insurance platforms are creating opportunities for multiple insurers to access insurance propositions with the help of an embedded insurance platform. For a change, I'm going to zoom out and talk about some of the data in the embedded insurance space across the world. Europe's embedded insurance industry is expected to grow by 30.8% on an annual basis to reach 10,781 million US dollars in 2022 and is expected to grow steadily, recording a CAGR of 19.4% during the period of 2022 to 2029. We're talking about insurtechs like VFox and LACA. In Latin America, embedded insurance industry is expected to grow by 43.5% on an annual basis to reach 1,808.8 million US dollars in 2022, recording a CAGR of 25% during the same forecast period of 2022 to 2029. Mexico, I mean, you can check out websites of Mexico-based Euros, Brazil-based Pair. Pair is actually also venturing into life insurance space in the embedded side. They have recently got a Series B funding of 20 million US dollars. Closer to home, the Asia Pacific embedded insurance industry is expected to grow by 32.3% on an annual basis to reach 25,000 million US dollars in 2022. It is expected to grow at a CAGR of 21.6% between 2022 and 2029. Now, India is a hotbed for fintech innovation with embedded platforms from India leading the way. Our panelists today are actively engaged in building the embedded insurance space in India and abroad. In my conversation with them, we will cover the different facets of the new category being created here, types of products, how technology can enable these products, the innovation in products, and distribution strategy. Ultimately, it's about customer value proposition and increasing the insurance penetration. Let me introduce my first panelist today, Saurabh Mehta. Saurabh is the general manager for Insurmo. It's the world's largest insurtech platform by eBowTech, covering SSA and Middle East regions. He also heads Insurmo's channel strategy globally. Saurabh comes with over 16 years of experience across product sales and business development, scaling early stage companies to high growth unicorns in Asia. He has extensive experience in embedded insurance and a deep understanding of fintech, travel, and e commerce. Our second panelist is Suvendu Prosthi, a business leader with over 18 years with leading BFSI corporates. His corporate career has been with brands like Bajaj Auto Finance, General Motors, Royal Sundaram Alliance, and Liberty General Insurance. After 23 years of corporate life, he decided to pursue his dream of becoming an entrepreneur and ventured into an insurtech startup called Discovery.com in February 2018. Discovery is into simplifying insurance purchase for micro and small business owners for their personal and business risk. Using data enabled technology, Shuvendu also holds MBA from Behrampur University, Odisha, and is a fellow of the Indian Insurance Institute of India. Our third panelist is Mayank Ravi. Mayank Ravi is, of course, with Aegon Life. He's the Senior Vice President and Head of Growth and Partnerships. He leads the expansion of Aegon Life's innovative products into new markets and customer segments using new age distribution models. In his last 15 years in BFSI, he has worked in various roles across several distribution channels, including e commerce, corporate agency, direct to consumer, and group business. So, without further ado, let me start with my first question directed at Shuvendu. Hi, Shuvendu.
Hey, hi Anu. Thank you so much for this opportunity. It's a pleasure to be here.
Great. So, the first question for you is, everybody's talking about embedded insurance, and the word has been around for a while.
Yeah,
Can you please share some thoughts on what are the different types of products that you have seen in embedded insurance, and if you can also be specific to life insurance from your perspective?
yep. I think the embedded insurance has been the buzzword, and like Prerak mentioned in the beginning, so last 2 years in every forum, whether it is fintech or insurtech or insurance forums, embedded insurance has been discussed extensively. Having one of the practitioner of insurance industry, I have been part of the insurance distribution since 2001, and I have seen similar kind of embedded insurance concepts being existing and being practiced in Indian market as well as international market in different forms as a affinity products, as a attachment products, as a loyalty products. But obviously we didn't have the technology then, and then we had a restriction of how much it can expand and go. But some of the concepts and experimentations existed since then. So, to be very basically to talk about what is embedded insurance, I'm sure everybody is aware, but just from my perspective, embedded insurance is very, when we have to build an insurance product which is contextual, which is very kind of you are not selling the product, you are, it is kind of a bundled along with another core proposition. So whether it is a hard bundle or a soft bundle, or we are giving this as a choice to the customer, that is up to us how we are offering it. But then what is making sense is how we can offer a contextual insurance cover along with a product. What happens is we have seen, uh, we have been also the victim of the low insurance penetration, primarily because of the no awareness of insurance and people not thinking about buying insurance that is a dire need. But when it comes to protection of any asset that we are buying or any particular event we are in, then suddenly in that contextual sense insurance becomes very important. Let me give you an example. We all have experience when you are buying a vehicle, the dealer is offering a vehicle insurance even though it is mandatory by law. So we take that, we buy a expensive phone, television, lot of insurance or assurance products are offered by the point of sale. That time also we offer it. But at the same time, if you now let's imagine I'm buying a expensive suit, a piece of suit from Raymond shop, and that is costing me 20,000 rupees. And if Raymond offers me a insurance for that suit which may cost 1,000 rupees, at that point of moment, the frame of mind I am in, that 1,000 rupees doesn't sound anything to me to protect that suit for all the eventualities. So when I'm talking contextually, that makes a lot of sense. But imagine the other scenario: I've come out of that store, and my agent is selling me uh, that same product of 1,000 rupees. I will say definitely say no to that agent. But if the store offers me and together it comes as a bundle proposition, then it makes a lot of sense, because right now I'm investing 20,000 for a product which I'll use probably 1 year, 2 year, and I'm more worried about what will happen, what eventuality. So having that contextuality is much more important, and point of sale and ease of that experiencing that product and buying that. So that is very important. So that is basic of kind of embedded insurance. And what is we have seen, the sudden focus about embedded insurance is definitely everybody the worldwide, we are looking at the growth of insurance and insurance penetration. This, so new areas of growth is possible only when we make it, the insurance becomes affordable, insurance becomes usable, consumable by everybody at every stage. So if people are not keen to buy long term commitments for insurance products, Then having this contextual low ticket size pay as you go, there are any methods, whether it is pay as you go or it is without payment, it is kind of part of the products, are different methods that embedded insurance comes. So especially to talk about various examples, we have seen many examples more in the health and the general space than life, because general and health insurance segment category has been providing covers based on the events, whereas life insurance company is more of a long term relationship, long term contract, and long term protection and savings as well. So from that aspect, maybe embedded doesn't makes a lot of sense. So I have seen various examples, whether it is ticket insurance or travel insurance, ride insurance, mobile safety insurance, extended warranties, or credit card insurance, cyber covers, and many, even in the Fasal Bima Yojana, that this was kind of retail covers nowadays available, along with the fertilizers. People are buying fertilizer, whereas they're getting the crop insurance. People are buying home products, they're getting home insurance. People are paying electricity bills, and they're getting the home insurance for a month. People are paying rent. Rent payment is suddenly become a big thing in the fintech world. Every fintech app and wallets, they are like chasing customers to bring them to the rent payment. So we can offer insurance along with the rent payment. So in life insurance side, few examples I have seen is the remittance protect. So we have seen a lot of growth of domestic money transfers from the migrant workers and the international people. So over there, protecting the individual who is transferring money on a monthly cover, so that may be currently offered through a group construct, but that is what something I have seen more commonly for life insurance as a product. Similarly, I have seen use cases in South Africa, when I was in Royal and Sun Alliance Group, that I've seen this product called Groceries for Life. So retail stores offering a insurance cover along with the monthly groceries, where something happens to the individual, the next 6 months, next 1 year, groceries are protected for the family. So it is about the positioning of the product and making it contextual and making it affordable and ease of convenience at that till. So if you ask 100 questions and may ask the customer to fill a big proposal form, probably it may not be more convenient to do that. But it is also important that how we are offering it, how we are making it useful to the customer and the entire journey. I think that's I probably took a lot more time, so I'm a little more passionate about this subject. So I spoke more. So I hope I could make some sense. Thanks.
No, thanks, Shubhendu. I think all of us are very, very passionate about this subject and
Yes.
hence are devoting the time today. I know Saurabh is also another extremely passionate speaker for embedded insurance. Would you like to add a few lines to whatever Shubhendu said in terms of all the different types of embedded products that you have seen in the space?
Yeah, sure. I think so. Suvendu, first of all, thanks a lot, for that summary. Whatever you said, ultimately it boils down to the eventual customer experience, right? How contextual it is. I think that's the core of all of that, right? And that was easier to do probably in general insurance. You are right. I mean, personally, and from what we are doing here or what we are seeing around the globe, not just our company, we have started seeing traction on life insurance side as well, in some cases, which is good. I think so. We sort of partner with a company called Ayo Insurance in South Africa, for example, and they support they provide embedded insurance to MTN, which is a telco there, and that's a stackable life insurance offered during pop-ups. So I think people are creating these innovative cases, and the point is how can technology support it, whether you can use tech to experiment it faster. Experimentation was easier probably with general insurance because you can play around with the size and all of that easily, of your sum insured, and what is covered and what is not. It was probably harder to do in life, but we have started seeing that. And this insurance is stackable. The more you top up, the higher your sum insured keeps getting. So it sort of becomes a way to attract and retain customers as well, right? So it has started happening, and we are seeing more traction in developing economies for life insurance, which is more embedded in nature. We have seen traction in Philippines and Vietnam, for example, where credit life is being used as a fully attached product, with small finance loans, and this is happening in rural areas as well. So wherever the reach of traditional insurance companies was a little bit, harder to get, we are seeing, either the insurance companies are coming up with ways of partnering with tech companies to do it, or they are partnering with other insurtechs from a distribution standpoint, to get it done. But they're trying to reach those masses who otherwise won't necessarily go and buy a credit life insurance. But when you are actually taking a loan, it becomes important that it's in some way embedded, right? So we have started seeing, these use cases. One which is very new and very innovative, very contextual to what is happening currently in US. So number of crimes have gone up, shootings happening here and there, right? So that is going on. We keep reading about it. And I was talking to a neobank, a few days back, who's trying to do some sort of insurance for immigrants in US, and there's an insurance called violence insurance. In the background, it's actually a life insurance, but it is essentially saying that if you if you get shot in on the shooting, it's a very sad topic, but ultimately you are, that's what insurance is for. And these are immigrants who might be scared, or when they're going there, there's a cold feet, they keep hearing, their kids are around. So it is touching a very emotional topic, which is closer to people's heart, and then they're still able to, at least someone has come up with that idea. So I think with GI, I think it was easier to think about these ideas and innovate. You could be selling remittance protection in the background. It's a PA product, and and it's doing great in many cases. It was harder to do in life. We have started seeing that, and I think tech is enabling that a lot in terms of how you can experiment, break it down, monthly, payments, or applying more AI ML to it. I think that is what we have started seeing. What is still to be tested, I think, in overall embedded insurance world, right? It's something, and you're right, so it's something which is not new. It's there for years. Some of these areas are tested when it comes to claims experience overall. I think that is a part we really have to focus on, because when you are selling embedded insurance, what you are doing is you are actually selling slightly smaller size insurance, but higher in frequency. That might lead to higher number of claims for insurance companies now, and that eventually leads to higher cost, right? So of managing the, those claims. So I think there is a big role that tech has to play there as well, not just trying to sell insurance or helping insurance companies or other, MGAs to sell insurance, at the same time also helping them out on the claims part of things, so that you can maintain that sort of, your margins, and it is more sustainable in nature. So I mean, we are seeing these use cases. It is happening. There's a long way to go. GI has seen this for many years now. COVID increased, adoption of at least travel insurance by 4x, 5x. So obviously GI is proven and is there, but at least, we have started seeing traction in developing economies on multiple use cases on the life side as well.
Right. Thank you so much for that. So before I come to a little more detailed question on, what can technology platforms do to enable insurance distribution for embedded products, let me come to Mayank. Mayank, as a life insurance manufacturer or insurer, apart from increasing the reach and targeting the customer, how do you think these embedded insurance platforms provide value to the end customer during the life cycle of the policy?
Sure. So we need to be so when you see that what life insurance companies are doing, are they are just a participant for these platforms, or they're orchestrating, or they are going D2C? But in all the scenarios, what is really very important here is, and I mean both the participants we're talking about that, is ease of journey. The ease of transaction, how easy it is to purchase journey is very, very important. It has to be simple. It's not an embedded insurance was not there in life insurance. Credit life product is not a new product. It was always there. But yes, the way the transaction used to happen has to change now. And technology has helped a lot in bringing that change. So around everything, technology is there. So technology is playing a role of an enabler here, and with this, entire landscape will change. Same for bite-sized product. If people are not interested buying a big ticket cases, because we fairly understand that insurance is not simple a product, it's complex product. People want to take some time to understand. So to get familiar with insurance, even if you have to start with a bite-sized product, a small product. So what is important for them is to keep it very, very simple. On a platform, you need to have a very simple journey, no legalish. It has to be very simple English, and then only you can gain trust. Okay, and most important thing, even Saurabh was mentioning about. So what are the touch points? So after the policy is sold, can the person forget about that? No, you can't. And this gives another opportunity both to platform and the insurance company. Then how do we again reconnect with the customer? Because now you have the critical data of that customer, right? Then how do you understand that better? Okay, and go back to the same customer with something better, something that really meets the requirement. Maybe they started with 1 or 2 lakh rupees policy as a bite-sized product, but will that suffice? No, right? But now, because I know the customer better, as a platform you have all the data, AI, ML, all will play a great role here. And then reach out to the same customer again and see, hey, can I do something more for you?
Right. So using the data and actually meeting the customer where he wants to be met, rather than
Yes.
asking him to come to a particular place to meet you as the product manufacturer, you are going and meeting the customer where he's buying a product and kind of trying to enable and bundle a product, an insurance product with whatever he's buying. So that brings me back to Saurabh and Shubhendu. And since you both covered a little bit about the products and also are great advocates for how your platforms actually can enable insurers to bundle these products, let's talk about some use cases. Whether these are from general insurance industry, and if you think that any of these can be replicated in some way or the other on the life side as well. So maybe we can start with Saurabh and then I will put the same question for Subhendu. Is that all right?
Yep.
Okay. So Saurabh, maybe we can start with you. Thank you.
Thank you. I think so. I covered a few use cases previously. I think those are the areas which we have at least not just from our standpoint, but globally we have seen adoption starting to happen. I mean, on just from India standpoint, we are doing a lot of general insurance side, which is seeing massive tractions. And for example, IRCTC is one of the customers using our platform indirectly, but I mean, through one of the insurance companies in India that we support. A lot of traction there in the background. It also covers life to some extent, but it is not purely a life insurance product. It is still a hybrid product, that is being sold. Whether it's travel protection or trip protection, these are obviously successful. What we need to, and it's not just that we have seen these inquiries and interest coming from a lot of financing companies in India. And today I was talking to someone from Bangladesh, where the same, and their overall income strata is a bit lower than what India is. So these insurance becomes a little bit more relevant. You are comparing basically tier 3, tier 4 cities to tier 1, tier 2 in Bangladesh, and their insurance penetration is even less. And these are leading companies from a tech standpoint who have a better reach, and they are actually inquiring about how can we actually embed credit life or other life products within those financing journeys, and at least cover themselves and the customers who are not even aware. So that is one part. I think second is why we talked about it, types of embedded insurance. I think one is opt-in. You mentioned, Suvendu. One is opt-out. One could be a totally invisible insurance, which we are saying as fully bundled, right? So that could be in my opinion, that could be a start towards life insurance, when people get more aware first of what a life insurance could be in an embedded scenario. And then once they get more familiar, then the next step could be now they know more. Right now awareness is not there, and when they know more about life insurance in rural areas, you could then go to opt-in and opt-out type of. So I think there is a learning curve there for everyone in adopting that. In GI it is easier to do it because overall it's easier to understand for everyone. For life we still need these use cases to come up, so that even insurers learn more from the data, which we have. We have less data when it comes to life insurance on the embedded side. And tech companies who are global in nature, whether it's we have started seeing, and you must be following Suendu, from your startup background, I mean, the amount of funding that has gone into insurtech companies obviously dropped after the collapse of Lemonade, for example, a little bit, but it has gone back now. And I've seen corporates, corporate venture arms of insurance companies pouring in multi-million dollars. This year I've seen two big insurtechs who have received funding from other insurance companies who are again either trying to leverage them from a MGA standpoint, from a distribution arm, or they are using them as their own core platforms, right? But they know that there is a need of tech here, and they need to move fast as well. So that is happening, and I think that's where you would make a difference.
Yeah, no, I completely agree, Saurav, and I think we are leading category in the fintech. The insurtech is where we're getting the all the attention from investors, and I think it is very easy to raise money as an insurtech than a fintech today. So that is definitely the focus of the world towards us. Yeah, I would like to add two aspects to it. Till now, whatever Saurav has said. One is the use of technology, how it can help the embedded, how it is helping. So if we think why embedded insurance, and all of us spoke about ease of uh, age of experiencing the embedded nature of the product by customer. So then what is important is to make sure we understand the customer, and that is only possible to through the data by use of technology. And then can we make it like the underwriting also based on the surrogate information that is already available, right? So as an insurance company, if you're talking about embedded insurance, we can't expect customer to have interaction. We can't have a purchase journey page. So embedded insurance does not have a purchase journey page. It is always a tick. It's a opt-in, opt-out, or it is invisible, right? Like all the three doesn't have a purchase journey page. That means when we are offering a product to the customer, we know the customer already. The details are already available in our whoever is the brand or bank or NBFC or anybody, or a e-commerce site who wants to offer it embedded insurance. So they already have information about customer. They have a lot of other information about the customer which can help the underwriter to decide what to offer, how much to offer, and whether to reject or offer everything, right? So I'm sure a lot of other sources of data is available to know about the customer's credit history, medical history, and what are the, if we are a bank, we'll know that what kind of purchases the customer is making, what kind of hospital expenses or medical expenses the customer is experiencing, because all the transactions are either from the debit card or the credit card. So the bank has all the information. So if insurance company can having partnership with the bank, if they have access to that data and they build that logic of this, then the it is approved, it is this, it is not approved. So those algorithms can be built. So that is where the insurtechs are helping to make the decision making. So using the data and technology to come out with the right product. So and providing that, offering that under the without any asking any further information to the client, is that is where the essence of the success of this embedded insurance is all about. So that is, I think, very important, and that's where the insurtechs are playing a very pivotal role to use of all the information from all sectors and making meaningful analysis and the uh, inference out of it. That is where the real value that the tech layer is playing. In terms of products, let me focus. I think various examples are always already shared. Let me share some of the examples where I see the life insurance industry should look at, like the ride insurance, which is very popular, whether it is IRCTC, whether it is the mobility company like Ola. So all of them are offering a personal accident cover. So why can't we offer a life insurance cover that is also equally important for that passenger at that moment of time? So it is about I know personal accident and health covers are now part of the life insurance industry as well. So they can offer replicate the same thing that the GI or health insurance is doing. But at the same time, I think while you are replicating that, you should also look at to bring out some of these aspects of life covers at that modular level, so that that becomes much more useful. Second thing is about replicating the credit life insurance. So credit life insurance is again is a, I think as an industry it is one of the biggest component of the life insurance premium on the group side, with so many disbursements happening on various types of loans, and most of the loans are typically providing a credit life cover, and so that is definitely another big segment. So why can't we replicate that to all the small ticket size line like BNPL? So BNPL is certain a growing segment that we are having. Every purchase, whether it is a Swiggy order or a movie ticket or a apparel purchase, everywhere we are being offered BNPL. So we don't pay. We are always asked to pay after some time. So if we have this cumulative exposure to a particular BNPL company or multiple company, so why can't each one of them bundle a life insurance cover or a critical illness cover to that effect that something happens to that customer? So then, even if it is the duration is 30 days or 45 days, why the life insurance cover has to be for a long term? Why can't it be for 30 days? So, right. So obviously these amounts are also not bigger. So these sum assureds are also not bigger. So we should look at those that as a aspect, and all the innovation that the general and life is doing from the accident insurance perspective, or the accident hospitalization perspective, or the health insurance category perspective, I'm sure now that all of this is allowed, this is what even the life insurance companies should look at and start looking at. When you're looking at embedded insurance, focus about these kind of product innovations. That's what some of those things I was thinking is more important from product ideas from life insurance perspective.
Great.
Right.
So when Saurav has, in fact, covered most of the use cases, but only thing I like to add here is that technology and data actually brings competitive advantage. Most of the things are there, and now with data and technology, this competitive advantage comes. So this is a time that we harness this and make things affordable for the consumer. Okay, and then reach out to them again, understand their need better. Okay, and then propose something that will meet their requirement in future, because it's not a one time transaction. Insurance company and platform cannot be just a point of sale. They need to become a lifestyle partner, right? It's not just one product and it's done. So it is very important that we keep engaging, and this technology helps a lot, and data plays a very important role. So let's leverage all these things and do a great job for our customers.
Right. So, actually, a part of my question is already answered in terms of the product innovation. And for Mayank, I have the same question for you. That how would you advise that companies that are moving their business digitally and are looking for more enablers in this journey? What would be your advice to give to those life insurers, since you are a pure digitally run insurance company?
So, digital is a loaded word. It means different thing to different people. And when it comes to advising, it's not that one thing will fit all. And they have their own definitions. But one thing that one must be clear is that why are we doing this? Okay, is it for reducing friction in the processes, or to increase productivity? They are trying to elevate profitability. Why are they doing it? If this why is clear for that particular company, whosoever is willing for this digital transformation, then we all understand that end of the day it's about integration of your digital technology into every area of your business, and fundamentally changing the way how you do business, right? And for that, once you have everything, you have the best product, you have the cool technology, you have data, you have everything, but you don't have the right culture, because it needs a fundamental shift there also, a leadership and culture. And then that culture is also about, should be giving you should have a tolerance for failure. Okay, and if these things are there, okay, it's very very, then I don't think any company will really think twice before venturing into this space. Yeah.
Right.
And
Very, very, very well said. Very well said, Mayank. So whether we are building an insurtech or we are serving an insurer, we all agree that selling life insurance is probably one of the toughest jobs that we have. But we also believe that our industry is important not only for the economy but also for the society. So we are all working hard to make sure that we can help people find more ways to protect the things they love and to protect the things they need in their life. So I think on that note, I would open the floor for questions. There are already questions that I see on the chat. If any of you would like to ask the panelists questions, you can type on the Q&A screen or on the chat boxes. So the first question is from Sridhar Ramamurthy. He's from Reliance Nippon Life. He's the head of products. He's asking, what's the risk that you foresee in the invisible insurance that you just spoke about? The bottom of the pyramid not knowing that they've paid for an additional cover. So I think he's talking more about how to handle the risk when everything is done digitally, especially when people may be using the system or actually defrauding the system to take policies. So being a part of products, obviously pricing is then defined by the number of deaths that are envisaged, and then it becomes slightly skewed if you are unable to figure out what would be the number of deaths in that case. So if any of you would like to take this question.
I will.
Maybe I'll add.
Okay.
Sorry.
Yes. Yeah.
Yeah,
Please.
Sure, you can take one by one, no problem. There are
yeah.
various perspectives to this. So
Yeah. Exactly.
So, as for my experience, so invisible insurance is where customer is not paying. The program manager, the group policy holder, whoever is offering, they are paying the premium, and they are offering the insurance as a part of the value proposition of their core product. So it can be a insurances that we get along with our credit cards or bank accounts, or similarly a club membership. So there are certain benefits. We get a lot of benefits, and insurance is one of the benefit where the program arranger is paying the program organizer. So there actually there is no feeling from the customer that it is mis-selling, or they are taking the money and their consent is not taken. But obviously sometimes they don't know what all benefits they are getting, so they may refer to some of the terms and conditions of that organization to get what exactly it is covered. And sometimes also the challenges we have seen is people don't know how to avail the benefit. Like Saurabh was mentioning that the claim, when the claim actually happens, we all might have seen, but when there is actually something happens and we don't know how to claim, so those processes need to be little more clear. So now having the technology based distribution, so whether it is a bank, a NBFC, or a club, so they are also making it is much more user friendly, so where you can initiate claim then and there. So I've seen like a lot of products, the insurance bundle that I get as a cover, I also get a link that where I can go and at least initiate some discussion or initiate a claim intimation. So which is definitely a welcome and wow feature for me, because always I have to, like earlier used to search where is the number, where is the email ID where I can write and understand more or claim it. So that is my view. Others please add.
Saurabh, Mayank.
Yeah, so multiple touch points for sure. It's important. You just can't sell something and think that the person will forget about it. There's a purpose. So that's very, very important. And this role need to be played very appropriately, both by the insurance company as a platform. Specific to the question of fraud, whenever you come with something innovative, with something relaxed, there will always be two set of people. One will try to defraud you, and second set of people will try to figure out that in future if something again happens, then how do we mitigate that particular risk. And these two things will always happen, and then you evolve. Okay. And when you have multiple versions of coming, okay, fine, we tested everything. So it's not that everything will be successful, and it's not that fraud never happens. It happens, right? But as an insurance company, it is our duty, and that to settle every legitimate claim. If the intent was not fraud, then we should give them, and also we should give them every possible touch point, communication method, so that they can reach out to the insurance company or the platform, or maybe the middle layer, to get their dues. So fraud is something I can't really ignore, that it will happen, but we also need to be prepared that
Yeah.
how do we solve this in future.
So I think what you're trying to say is that we should not be foolish when we set up our systems and our
No, at
basic
all.
underwriting and checks and KYC and things like that. But at the same time, once you've done everything that is possible, I
Yes.
think it's also important that as insurers, we should know that there are always people whose full-time job is to just defraud the system, right? So, as long as we are able to control that, the big pools of, people who are actually defrauding the system, I've seen, in 90-95% of the cases, the people are genuine. It's just that people don't know that, how to get the claim, what information to give. So I think that is also one of the very very important features, and it's a very good question asked. But I don't think there is a secret sauce, as Chuvindu was saying, right? You said that everybody will expect a secret sauce. There is no secret sauce. We'll all have to work together to ensure that good lives are underwritten, and good claims are paid, and we don't really uh, uh, we don't really make a good client suffer thinking that he's a fraud, he's a part of a fraudulent system.
Absolutely
So I
Next
true.
think
Well said. In
question.
fact, we are in the business of settling claim.
Yes,
So
absolutely.
how can
Yes,
I
as the
say?
old schoolers, absolutely, we are in the business of paying claims.
I think Sridhar has Sridhar asked this question, and he actually asked a follow up question as well, which
Yes.
is just slightly so. So if you understand his points, follow up question is there was a company who basically did all this invisible insurance, and they actually never got a claim, right? And then they were under regulatory issues. So I think the other side of insurance is that is the insurance relevant or not, and I think that's a very important point because if you keep on adding invisible insurance which is not relevant because no one actually saw that claim, whether it was
Yeah.
sold in a bad way, the policy was not clearly understood, or whether it was not relevant, I think it is the cumulative duty of everyone in the insurance industry to make sure that it's ethical and what you're actually selling does make sense, right? So those cases, it's fraud is one part which I think tech can play a very important role in automating things and finding out where the fraud is happening. That is given and it has to happen. It is already happening. But again, I think from a conscious standpoint, it is obviously a duty, of everyone here, to when you're doing invisible insurance, it is important to see it is relevant or not. Someone is paying for it, right? Whether it's customer is not paying for it, maybe the
Yes.
company, as you said, so when the program manager is paying for it, you get travel insurance and credit card, right? And I mean, I have it and I have used it, so it is relevant. But there could be insurance which is not relevant and it is just used for marketing purposes. I think that is the area which you was touching, which is a valid point. I think it should be something that we should be conscious about, apart
Right.
from the fraud. Yes.
Right. Thanks, Saurabh. Okay, so we'll have to touch upon all the questions. They're not too many, so we'll try and keep the answers a little more to the point. Atul Sharma, the CEO of Shriram Life, is asking us, from a customer perspective, in an embedded insurance, what is the likelihood of a customer or his family remembering the cover at the claim stage? How many families will benefit by getting a claim?
That's a very good question. In fact, we were working on that. So, idea was that when you send a policy document, at the same time you also send some good communication to the family members, and in case something goes wrong, then whom to reach out to. And this is very very important, irrespective of the summit risk. This communication should always go along with that policy document, be it in a digital way or you're sending the hard copies in case you're not a digital insurance company. But this has to go, and it's not that claim never come. Claim comes sometimes because of circumstances and all, it's different. But if the communication is appropriate and insurance company keeps reminding them, and I always believe in that we can't just forget a customer after selling one thing. We can always reach out to the same customer. So we are talking about data, we are talking about technology. Is it only for one transaction or for multiple transactions with that customer? As I said, insurance company should become a lifestyle partner with them, not just an insurance company mitigating and minimizing risk for them, right? So there is no reason for insurance company to just stop communicating. We must do that right in the beginning. Keep sending the reminders. Okay, if something goes wrong, then here we are, and these are the coordinates. I don't see any challenge there.
Yeah, I think I understand where Atul is coming from because a lot of times when the that actual event, unfortunate event happens, family members are not aware what are the actual cover that exist. Forget about the embedded insurers are invisible. Even the one that person has purchased also his family members don't know. Okay, we don't have a habit of sharing, discussing all of these things with our family member, to our spouses, and keep all these things updated. But I think there is a scope. I have seen one international company where if you enter a credit card number or type, it will show you all the privileges that you have, including the insurance benefits. But I had heard some of the people thinking to start in similar lines in India, but I
So in
haven't seen.
India, there are insurtechs who are already on this. They have already started their
Yeah,
business models running on
exactly.
unknown insurance, which is if, and
Yes.
I have tried it myself for somebody very close who passed away in an accident. And
Yeah.
I sent the credit card numbers. They actually came up with a list of credit cards
Yes.
where the person was covered. There are specific documentation that is required, but it's not an insurer. It is an insurtech that actually provides this solution. So it's
Yes.
it's a part of their business model. Okay, moving to the next question. Jayan Matthews is asking how receptive have insurtechs found insurers when it comes to integrating the service APIs with insurer systems? Also, does regulation support this today? I think we will, the regulatory part, let us not comment on because, none of us are experts in regulations on this. But yeah, I think to some extent we can, our platform founders can tell us a little bit about how has their experience been.
Yeah, I mean, so I can go. We have seen all sorts of responses, right? So there are insurance companies, who are amazingly ready to share their share their APIs, and I think there are more insurance companies who are ready to share their APIs rather than product specs. I mean, as a platform, a lot of platforms are coming up like us, who are middleware platforms who can actually take the products, configure in our own systems, and give out APIs to channels. At the same time, there are insurance companies who do not want to share the product details, which is very valid. In that case, they are ready to share the APIs. I mean, in the end, I think it's a chicken and egg problem. If embedded insurance as a concept is growing, right? Then on the other side, from a supply standpoint, insurance companies do see the value. I think eventually, if they see the value, they are not hesitant in sharing. The point is, are they seeing the value, right? And that differs from product to product, from country to country, from adoption to adoption. So there is no fixed answer here. But yes, I mean, if there is a value, I have not seen problem in getting these product specs from insurance companies. I think it's going in a very very positive direction. That's my opinion.
Sure. I would like to add that it is very important that we provide that ease of experience to customer, not only while availing the insurance, but at the time of availing the benefit of the insurance, which is the time of the claim. So I think any platform, we are definitely very more than keen to offer similar experience, build layers of the claims side. So I think every insurance company also were more focused about the initial purchase journey perspective, and the claim experience was more limited to their claims team and their office and their customer service team. But if insurers would like to offer that as a API service, we are more than happy, because then it becomes under one platform, one page, customer can avail both sides, the policy and post policy side of experience.
Right. So one of the questions I'm seeing here, there are actually many questions. If any of you like any questions, you can pick it up and answer. But one question I see here, which is also very relevant, which is from Ajay Vernekar. He's with SBI Life. He's the CIO. He's asking that in embedded insurance, who is responsible owner for the customer? Is it the ecosystem or the insurer?
I think
And
both.
it is the insurer,
Both.
but the
It's
ecosystem has
always
to
the
be
insurer. Yes.
always the insurer.
Yeah, I
But
think insurers comes to know
has to
little
pay.
later. The first the customer reaches to the I
To
think
the
in the
ecosystem.
ecosystem is the
Yes,
program manager
yes,
who was
yes.
offered this. Always customers grievance is to them. I have seen in bank assurance model customers coming and closing their relationship with the bank if they don't get the claim. Whereas the getting that claim or not getting the claim has no relationship with the banking relationship. Bank only was one of the facilitator of getting that product or insurance. But there are both sides a sufferer, the insurance company as well as the program manager. But the program manager is where we need to initiate, the initiation will happen, so they are the primary owner, and ultimately the service comes from the insurance company.
Yeah, but Suvendu, you raised a very, very important point, right? That if intermediaries, in a way, whether it's banks or brokers or TPS managing the program, if in some way they are actually transacting or interacting with the customer in the first place, and in the mindset, intermediaries are thinking that ultimate responsibility lies in the hands of the insurer, then they sometimes end up compromising the experience. And I think both parties, if not, should be equally responsible, so that the first touch point is not compromised. In the head, generally, there's a chance that banks sometimes would think that ultimately, it's for me, I just did the sale, right? Ultimately it lies with the insurer, and that's where all the damage happens, because it's not only the bank who loses the customer, there is a high chance that the insurer also loses the same customer. So, as collectively, ideal state scenario, I think all ecosystems should be responsible equally in some way. But yes, I mean, currently could be possible that insurers are more responsible.
No, truly, I mean, it's a collective responsibility because the insurance companies are working with the platform. Of course, they need to work together on this. It's not that the
But
insurance company
yeah,
will
but
see.
I also think once you've acquired a customer, the insurer is definitely, just because he's probably not in the first layer of the relationship doesn't mean that he needs to take a backseat. He or she needs to be engaged with this, with this particular customer, so that they know where to reach out to if they are not getting, even if they like the bank and bank manager, suppose the bank manager gets transferred, he still needs to get his claim, so he should know where to reach out to if it is regarding the insurance. And bank is actually, all right, it's one of the largest distribution points, but there are many other smaller platforms also where these problems might reach out to. So the question is very relevant. However, we have a lot of questions here, we have very little time, just 2 minutes to go. So say, Mayank, Shuvendu, and Saurabh, would you like to select any one question that you see here that you would like to answer very quickly? And then
I
we
don't
can
want to be
start.
unfair here, Anu. So I think I'll leave this with you. You can pick because you have really good questions. In fact,
Yeah, I
I'm happy
agree.
to answer all.
In fact, there is a very good question on, do you see that innovation here can get accelerated if something similar to open banking happens for insurance as well? So,
Innovation
Shubhendu, I
is
mean, you can definitely, throw some light on this separately to Ramu Gudi Metla. He's the VP at SBI Life Insurance, and Saurabh, you as well. So it's going to be quite an interesting discussion. I hope that all of us who have joined here today, listening to Saurabh and Shubhendu and Mayank, I've definitely had a excellent conversation, a lot of learnings in this process. Thank you so much for making time and giving us all the insights that you could. Maybe we can have another phase two or part two of this discussion and at another time. Thank you to Life Insurance Council and all IIA members as well as EXCO, to all the audience that made time to listen to our conversation. Happy to see that we had over 100 people joining in. All the best. Have a good evening, everyone. Bye bye.